So this is a transfer of receivables without recourse. This is exercise 7-19. So JFK factors $300,000 of accounts receivable with LBJ Finance without recourse on July 1st. That means that once they're sold, there's no getting it back. So over here, basically JFK doesn't have any further obligations. So receivables are transferred to LBJ, which will receive the collections. LBJ Finance assesses a charge of 1.5% of the amount of the AR and retains the amount equal to 4% of the AR to cover the discounts, returns, and allowances. So let's go first through and do this for JFK, which is the transferor or the seller of their AR, okay? So over here for JFK, and this is on 1/7/1/20, I know that I'm going to be getting some cash, and I also know that I'm going to be taking some accounts receivable off my books. So let's first figure out the amount of cash we're going to be receiving. So over here, my accounts receivable is 300,000. So what amount do I actually get? Well, there's a finance charge, and this is 1.5%. Then there's going to be a holdback of 4%. So my AR is 300,000, but over here, there's going to be a finance charge here of 4,500. And then you're going to have over here a holdback of 4% of 12,000. So the amount of the cash proceeds is going to be the sum of these three values here, or 283,500. Okay, so this holdback is what we call due from factor. So over here, due from factor. And my due from factor here is going to be the holdback amount or $12,000. The amount of my accounts receivable that I've gone through and factored or I'm taking off my books is $300,000. Note here, this is without recourse, so if they don't get collected, they don't get collected. Obviously, they have the holdback or the due from factor or the holdback amount, but that's it. So when I look at this in terms of what do I need to do to balance, my difference here is going to be for the 4,500, which is going to be my loss on the sale of receivables. This is essentially the finance charge. Okay. My next one over here is on what do we do about for LBJ? Okay, basically the buyer of accounts receivable. Let's see what LBJ is going to be getting. So on 7/1/20, they're debiting AR, which is going to be for 300,000 because they have the right to collect that amount. They're paying out cash of 283,500 to JFK. Then over here, owed basically due to JFK, which is going to be the amount of the holdback. And then lastly, they're going to have over here interest revenue. And this is the finance charge. And this here is going to be 4,500. And this is going to be the record purchase of receivables. Okay, so this again is without recourse. What's the difference between these two here? If it's with recourse, you have a recourse liability, which is going to increase the loss on the sale of receivables. So it's then the loss on the sales of receivables becomes the finance charge plus the $2,000 recourse liability. This is from exercise 718 that I did on a prior video. but this is how we're going over here and recording this. So hope you enjoy this video. I look forward to seeing you on the next one. Have a great one.